Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the crucial level for both the indices. We'll also be discussing on the sectors in focus in trade today, as well as the next few trading sessions. First up, a brief outlook at what happened in the markets in trade yesterday. In the global markets, US stock markets witnessed a mixed performance as traders hesitated to make bold moves before the release of the important economic data later this week. So we had the Nasdaq which gained by 0.2%, the S&P 500 closed absolutely flat, meanwhile the Dow corrected by 0.4%. The S&P 500 has formed a high wave-like candle which indicates indecisiveness at current levels. Going ahead, the zone of 5,320, 5,300 will act as the immediate support for the index, while 5,380, 5,400 will act as a crucial hurdle. Coming to the macro factors, so Brent oil has continued its pullback rally for the fourth consecutive trading session. On Monday, it surged by 2.67% and ended above its 20-day EMA level for the first time after 21 trading sessions. Going ahead, any sustainable move above the levels of 82 will lead to a sharp upside rally towards the levels of 84 in the short term. Since the last three trading sessions, if you see the dollar index DXY is oscillating in a narrow range, that is 103.02 and 103.31 zone. A decisive breakout in either side will lead to a trending move in the short term. Now coming to the update regarding our markets. So the benchmark index Nifty has taken support near the 50-day EMA level at 23,893 on August 5th, and thereafter it has witnessed a counter trend consolidating since the last 5 sessions. During this phase, the index tested the zone of 24,480, 24,510 level, which is the 38.2 Fibonacci retracement level of its prior downward rally. This counter trend consolidation currently looks like a bearish flag pattern on the daily scale. However, a price confirmation is essential to validate this pattern. Additionally, for the second straight session, the index has struggled to maintain levels above the 20-day EMA. Going ahead, the zone of 24,200, 24,150 will act as the immediate support for the index as the lower trend line of the bearish flag pattern is placed in that zone. Any sustainable move below the levels of 24,150 will lead to resume its downward journey. While on the upside, the zone of 24,500, 24,550 will act as an immediate hurdle. If the index sustains about 24,550 level, then it is likely to continue the pullback rally. In that case, the next zone of resistance is placed at 24,700. Coming to the derivative data, so the August futures ended on a flat note and the cumulative open interest has surged by 0.46%. If we see the option chain data for the weekly expiry, do note that since Thursday is a holiday, the weekly expiry for Nifty will take place tomorrow itself. So at the current juncture, we have 24,400 which has significant call open interest followed by 24,500. And on the put side, 24,300 has substantial open interest followed by 24,200 strike. Coming to the update regarding Bank Nifty, so for the sixth consecutive trading session, Bank Nifty oscillated between 50 and 100-day EMA levels. On Monday, it formed a high wave-like candle on the daily scale, which indicates indecisiveness at the current levels. Due to the consolidation, the short-term moving averages have started losing their curvy nature. Further, the daily RSI is in the sideways zone as per RSI range shift rules. Going ahead, the zone of 50,200 will act as the immediate support for the index, while the zone of 50,850 will act as a crucial hurdle. A decisive breakout on either side will open the gates for a trending mode. If the index surges above the levels of 50,850, then the gap zone of 51,200 will act as the next crucial hurdle, which is formed on 5th of August. While on the downside, if the index slips below the levels of 50,200, then the next support is placed closer towards 49,700, 49,800 mark. Coming to the derivative data regarding Bank Nifty, so if you see the option chain data, 51,000 strike has significant call open interest followed by 51,500, and on the put side 50,500 has substantial open interest followed by the 50,000 strike. For the weekly series, the PCR is at 1, while for the August monthly series we have the PCR which is at 0.89. Coming to the key market indicators, so in trade on Monday the volatility index ended at 15.86 with a gain of 3.47%. Going ahead, any substantial move above the levels of 17.2 would lead to a sharp rise in market volatility. Coming to the key sectors in focus, we had Nifty Pharma, Nifty Healthcare, which are likely to continue their outperformance in the next couple of trading sessions. And on the flip side, we have Nifty Metal and Nifty Realty, which witnessed a pullback on Monday. However, we'll recommend to avoid these sectors for now from the short term basis as the trend continues to remain bearish. Coming to the FII DI data, FII sold to the tune of 4,680 crores in the cash segment, while DIs purchased to the tune of 4,477 crores. That's a wrap of today's edition. Thank you for regularly listening to our podcast. Do tune in tomorrow for more market updates and insights. Thank you and have a happy trading session.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.